Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. update. We had a little technical difficulty, but it's Thursday the 10th of November, so let's get started. You should ask yourself this question: is personal one-on-one MarketClub coaching right for you? If you'd like a free consultation, just give us a call, 877-219-1482. The number's on the screen. Hey, don't underestimate yesterday's market action. The market action in the equity markets yesterday is a grim reminder of just how fragile the economic and financial system is globally. We would not dismiss the market action as just another pullback in the market. The sharp down move in the markets should not be ignored, in my opinion. We are looking at a key support level now on the S&P 500 at 1220. A close below that level will accelerate the decline to the next key level of support, which is 1180. That move may have to wait until Friday as traders jockey for positions today. For the year, the S&P 500 at the moment is down, whereas the NASDAQ is about flat and the Dow is just up barely 3%. Yesterday the copper market gave a pretty strong negative signal as it moved below the 350 level. What the copper market is telling us is that demand is just not there for this industrial metal. Things are slowing down. For some time now, we've been discussing the trials and the tribulations of Europe and all the drama that has become the Greek tragedy. The fact that we have a new prime minister in Greece does not change one thing, in my opinion. Italy is now the star of the show, and we are not convinced that Prime Minister Berlusconi is going to step down off his pedestal anytime soon to solve their problems. Politicians still have not gotten over their quick fix mentality that they love and are counting on to solve this mega financial mess. The reality is there is no quick fix. It's going to take years for this mess to be cleaned up, and yes, it will get ugly. As you mentioned at the beginning of the week, the best thing a trader can do at the present time is to watch the market action, and it will tell you exactly what to do. We believe that the rest of this week is going to be very important, particularly when we close tomorrow. If we have a negative close on Friday below 1220 on the S&P 500, we would then expect to see this index move lower for the balance of November. Okay, now let's go to the charts and the video and see how we can create and maintain your wealth in 2002. So let's bring up the portfolio. Here it is. We've got a number of markets to go through, and that's why it's so important we got this video out to you today. So we're going to click on the S&P 500 and see exactly what the market action is. You can see this was yesterday's very strong down move. I think we drew this line yesterday. If we didn't, we'll draw it today. Simply with MarketClub tools, you click on the bottom here, drag this up, and bingo. In fact, yesterday when we did this report, this was still above this line. It just crashed down later in the afternoon. You can see that our trade triangles, the monthly is negative, the weekly is still mixed, the 1220 level, again, look how important that level is, and the daily is at 1238. So we've got some negative things going here. We're lower for the week, flat for the year pretty much, or lower for the year, and I think we could see this market come under pressure, particularly if we take out these lows here around the 1220 area. But again, potential is for this market to trend down, and if we put our Fibonacci tools on here, you can see quite easily where we could see this market head down to somewhere around the 1150, 1160 area, which is a 61.8% retracement. So let's see how that plays out. I'm going to take this off the screen, go to our next chart, and that's going to be the Dow. Now the Dow, as I said, is 55, indicating a trading range, and you can see there again, it looks like it's beginning to round out to the downside or consolidate. It's going to be very important, this level here, the 11.6 area in the Dow is going to be very, very important. We're about 300 points above that right now. So again, if we put our chart studies on, and we're going to put our Donchian trade channels, which are very easy to do, and you can see our parabolic, and you can see the parabolic, which is the PSAR. It stands for parabolic stop and reverse. These little dots here, these little indicators on the screen, indicate when the market's below that level, the trend is down, and when it's above that level, the trend is up. You can see it moved above that level in early October, about the first week in October. So now it's moved below that level, and as we move down here, we can see that our MACD, or the MACD, is just turned down yesterday, and it looks as though we may see some further downside action in this market. Again, the 11.6 area is very important in my mind. If we go below that level, we'll see this market, in my opinion, go down. I don't think we're just going to see it suddenly go up. I'd be absolutely amazed if that were the case. So let's see our next market, and the next market is going to be the NASDAQ. And the NASDAQ's a little bit of a different picture. You can see it's got a little bit of a negative action here. We made new lows, stopped exactly where we should have stopped, around the 2600 level. This is a very, very key level in my opinion. If we go below that area, we'll see this market come down and see more pressure to test the 2550 area. But if we cruise down here, you can see that we've turned down the MACD. Again, it takes a while for these markets to turn down. When you can see it turn down here, it turned back up here. So it's been in this mode now for quite some time, since early October. So it's just turned down. It's about 6 weeks. So I think we're seeing this market, if you look, I just put my telestrator on here, you can get an idea. We're seeing this market sort of kind of roll over this way. And I think, again, this is on the NASDAQ, this is a key level. We stopped there today. I say tomorrow, maybe the day we go down. And this is another key area, the 2,550 area. So lots to look at. Let's take this off the screen. Let's go to our next chart. We have a lot of things to cover today because we made new lows on several markets that I want to share with you. And let's go to the next market. Next market is going to be gold. Now, gold basically moved to its lowest level in 8 days. You can see the parabolic is just right here at 1,723. We got down to as low as $1,736 today, and we said the 750 area. I think we could trade back and forth. The market still, to me, is in an uptrend. Trade triangles, the monthly and weekly, are still positive. We have a plus 85. That could easily go to a plus 100 in the next few days. But generally speaking, this action here is very indicative that we may see like the bottom here, and I think maybe tomorrow we want to look to maybe be looking to buy this market. So let's go to our next market, and the next market is silver. Now, silver is not so fortunate because silver, even though it tends to have that move today, it's still in a 55 range, a trading range. It's just moved below the PSAR, and also if you go down here, it's just beginning to turn down. It hasn't crossed over yet, but it's just beginning to turn down. But our signals here are mixed. We have an intermediate term trend that's up and a longer term trend that's down, indicating that trading range we talked about many times before. If you see a plus 55 or a minus 55, it means you should probably be looking to use indicators like the Williams percent R and also the parabolic and the Donchian trade channel. So let's go to our next market, and that's going to be copper. Now, copper, we mentioned this very carefully yesterday, and we said the 350 around. I'm going to put my telestrator on again to show you where this is. We said the 350 area is a very, very key level of 3.50, and that was right here. And the reason we said that was twofold. One, it would turn one of our indicators, which is the daily down. It also is a parabolic PSAR, and that's now turned up. So you've got your stops really around 370. And we got down to this level here, very close to a Fibonacci retracement level. But again, it still looks to me like we'll see this market be on the defensive. As I say, it's a good indicator in terms of economic activity. If the market's going down, it means the economic activity or industrial activity is not so good. And if we go down here, you see it just turned down yesterday. So I should say today. So I think this is going to be on the defensive. You can see very clearly. One thing I always like to look at, and I do on my weekends, is to look at the weekly charts. And if we put the weekly chart in, you can see this is closing down quite dramatically for the week. And we are closing, if we closed right here, this would be the lowest close in 2 weeks in this market, because we closed here last week and we closed up here the previous week. So closing down here would not be a good sign necessarily for copper. So let's go to our next market. Now let's go back to the daily, of course. And the next market we're looking at is crude oil. Now, crude oil has really been amazing. We're trading currently at 98.02. It's putting in a very, very good performance. Our indicators are mixed on this, however. And again, I stress that the long term is 95.79. It's negative. intermediate term is positive, and short term 93.80. Now, the one thing I want to share with you is the fact that we're up towards this level. And if we scope this out even further, let me just give you an idea of what we're looking at. Pull this out. I'm going to put our Fibonacci numbers in here, and I'm going to start from the highs right here. Oops. Start from the highs right here. Drag this down, and you can see in our report today we say that the $100 level is pretty much right here. 99.99 is a 61%, 61.8% Fibonacci retracement. I think between here and 99 or $100, the market's going to have a problem. You can see back here we had some resistance in this market, but it's acting very well. It hasn't turned our long-term monthly trade triangle positive yet, and we'll have to wait and see how that plays out. But generally speaking, I think this market is going to find problems right around these levels. We are overbought, but that's not to say we can't go higher. So let's go to our next market. And the next market we're looking at is the dollar index. And the dollar index, which we actually have been pretty happy about, is had a nice move up. Certainly, I'll scope that in a little further so you see. But you can see that today we had a pop and then it came back down because of obviously just people positioning for the weekend. But nonetheless, we have all of our trade excuse me, all of our trade triangles are positive, indicating that this market can go higher. We're looking for a move up to the 79.50 to 80 level, which is right around here. And I think that's going to be probably all she wrote for the time being. But the market is in a bullish phase, and obviously you don't want, we had a major sell in the euro yesterday, and we also, I think I showed you this formation yesterday, and that is if you, let me just take off the Donchian trade channel again and the reverse. This is what we were looking at in this market, and it really seems pretty clear to me, and that is that we just simply, whoops, if we simply draw a line across here, we sort of come back or pulling back. This is like a head and shoulders bottom or a base, what we call an energy base to move higher. And it looks like a happy face here, but right now this is the resistance. This was resistance. Now it's support in my opinion. And I think this pullback is probably going to be met with good support, and we'll see this market go higher. The count is obviously from much higher levels, from this level here around 75 to 77.40, something like that. So if you just add that number up, 2.5 cents, takes you up to the 79 to 80 level. So that, I think that's a target zone to be looking for in the dollar index, at least in the short term. So let's clear the screen again. Let's go to our next market. And the next market we're looking at is the Jefferies CRB index. Now this is interesting with if I just scope this out and put a candlestick chart on there again. This is a daily chart, but what's interesting to me is our monthlies are still down, the weeklies are up, but we're seeing, even with the big move up in crude oil, we're still seeing this market on the defensive, which is very interesting because this was following crude oil religiously. So you've got a lot of other commodities that are under siege, they are going down, and I think this is what you have to look at. So if we're looking at a weekly chart, just click there and look at the weekly. You can see we're down for the week. It's sort of flat a little bit, which is indicated in our 55 score, which is a trading range. We talked about that before. And once you know how these things work in terms of the trading ranges, you'll be so much more comfortable in the market. So let's just go back and put our Donchian trade channels on and our parabolic, and you'll see we're very, very close in the parabolic today. If we see the parabolic, if we see this market go below 316.45, then that will be an indication that the parabolic has now moved to the top, and this will be under further downside pressure. Again, not much going on with the MACD. So let's go to our next market, and the next market we're looking at is going to be the euro against the US dollar. Now this is a very important level, and that's why we wanted to show you the dollar index, but also I wanted to show you this as well. This is a minus 90. We had a signal, I'll put that on, we had a signal yesterday at 136.13. You could have put that on all day today. The high today was 136.48. It's currently trading at 136.19, so you could still actually short this market, buy the dollars, sell the euro at current levels, and there's ETFs you can do that with. We'll be looking at one of those in just a moment. But again, once the market moved below that key level, 136, that was a big indication that this market is going, that was the level right around there. Once it moved below there, there's a big indication that it was headed lower. I think this market can go down to the 130 level in the next month, several weeks, whatever you want to call it. But certainly I think we can test this level here around 132, and I think we can actually take that out. So let's clear the screen, go to our next market, and the next market we'll be looking at is the Citi. Actually, Citi was under a lot of pressure early today. You can see it's still under pressure. It's down. The banks are still not in good shape, in my opinion. We had the move down. You can see this is the lowest we've been in quite some time. We have to go all the way back to somewhere like this, which is the 18th of October, to see where we close. But this is going to be a very interesting to see where we close this Friday, tomorrow. Again, you've turned down the MACD, looks on the defensive. You're not really that heavily oversold, but certainly getting down towards the lower end of the Donchian trade channels. One thing we want to see is if this market goes, the weekly turns red or negative, I think that'll put more pressure on this particular market. So let's go to our next market. The next market we're looking at is the SDS Pro Shares, ultra short the S&P 500. Remember, we talked about this. We looked at the S&P. This is one of the questions we had on our show on Wednesday. By the way, it was a fun show. We really enjoyed it. And this is what we're looking at right now. The market had a very, very good move up. It's come back today. I think basically we'll maybe do some consolidation, but I think eventually we're going to see this market go higher, meaning we're going to see the S&P go lower. But we want to see a little more action in this market, and certainly the 1220 area on the S&P 500 will accelerate this move. So let's see if we've got anything else in our portfolio to show you today. Yep, we have the SKF, which is ultra short the financials, and that's actually had a pretty good day. It actually opened lower, came right back, and just about tied yesterday's high, which was 65.43. We got as high as 65.50, and it's pulled back. Certainly a close over 65.50 I would consider to be very, very bullish on the SKF, indicating a move possibly to the 70-75 level. So let's see how that plays out. But again, we're in a minus 55. If we scope this down earlier, you'll see that we can't quite see here on the. Hold on, we'll do something. We'll do some little magic here. So below chart studies, I'm just going to take off the volume, and that'll show us what we want to see. So you see we just made that turn. Looks like yesterday and the day before and yesterday. So I would say this market's oversold. It's turning up on the MACD. You are also positive on the parabolic. So I think there's a lot of pluses here. We want to see some of our indicators turn right. But the indicator we most use on this is the S&P 500 index itself, not so much the ETF. That's what you really have to pay attention to. So let's go to our next market. And this is the euro. This is basically short the euro. Now the signal, we had a signal yesterday at the euro at 18.50. The market's currently trading at 18.44. I think it's an excellent buy. I think this market's going to go higher in terms of the euro going lower. And as you say, everything, this has just come back to the original signal. So there's lots of opportunity here to get long this market, which means it's ultra. So it means it's a double leverage. So if you're not comfortable with double leverage, you shouldn't be doing this, and you should be looking to just trade on a regular basis. I mean, we have some other suggestions for you on that, but generally speaking, it's a leveraged ETF, and this to me is a pretty good way to get in this market if you want to be short the euro. Also, if we look at this just on a simple weekly, you can see it's actually doing very well. Nice move up. I think if we can close, certainly if we can close over the 1850, 1860 area, I would be very comfortable about being long. It doesn't move that much. Currencies tend to move, but not as much as most people think. What's attractive in the currency market and why people trade it is because of the leverage. So we've covered a lot of markets today. We had some technical difficulties earlier on, but again, if you If you think personal one-on-one coaching, Market Club coaching is right for you, why don't you give us a call? It's a free consultation, so it's not going to cost you anything, and just see if it's right for you. You can call us at 877-219-1482. Hey, this is Adam Hewison. Have a great trading day. I'll be back tomorrow, and hopefully we'll have no technical difficulties, and we'll be broadcasting live. So have a great day. I'll see you tomorrow.